Hey guys, welcome to the Hoan Zone, where we help you multiply the assets that you own. And in today, we hone in on Philadelphia. But before we get into that, please subscribe to the channel if you haven't already and hit the bell icon because I'm going to be releasing a video every Monday and Wednesday. All right, let's get to it. So in Philadelphia, I would say that we have a unique opportunity to invest in real estate. Why is that? Well, because Philadelphia is one of the largest major cities with the lowest price points. Let's check it out. If you look here, I Googled what the largest cities in the US were, and this is what showed up. First, we have New York City, then we have Los Angeles, Chicago, Houston, Phoenix, then Philadelphia, San Antonio, San Diego. Now, what I did was I looked at what were the prices of the houses in those cities. First up, we had New York City at $657,000. Los Angeles came in at a whopping $809,000. Chicago is definitely looking way better at $276,000. Houston coming in at a very reasonable $204,000. When the temperatures rise, so do the prices. We got Phoenix, Arizona coming in at $310,000. Here we go, good old Philadelphia, $208,000. San Antonio coming in at $202,000, and coming in at a massive $741,000, we have San Diego. Of these 8 large cities in the US shown here, only 3 have property values within the $200,000 mark. But today, it's all about Philadelphia, and here is one of the coolest maps I've seen to show all of the different neighborhoods within Philadelphia. They are broken up into these cute little names, but I give them much larger names. Let's look at this area right here, the upper right-hand corner. I call that the Northeast. Super simple. And then we have areas over to, let's see, the south there, South Philadelphia. And then we have Southwest. Above Southwest, we have West Philly. And then all the way to the left there at the top, we have Roxborough and then East Falls and Manayunk. A lot of neighborhoods change in Philadelphia, and they're constantly changing. Kensington being one of them. Kensington, which is at the bottom or right in the middle to the right there, that was one of the worst areas in Philadelphia, and now it's being developed big time. Philadelphia, it's a really interesting place to invest because if you don't know where you are, you could get it wrong. And you could do a comp and say, oh, this is only 2 blocks away from there. This is 2 blocks this way. And it could be a completely different neighborhood, completely different feel, completely different ARV, completely different rent structure. But overall, I would say that Philadelphia is a pretty good place to invest in because the ROI is still there. Something I'm going to do today in this video is I'm going to do an interesting search. I'm going to look up properties in different zip codes to show you whether or not Philadelphia can hit the cash flow point that you're looking for and see if it passes the 1% rule. I don't see many real estate investors talking about this technique, so hopefully you learn something really helpful and you apply it within your area so that you can find little gems that other people miss out on. It is super important though that you know your neighborhoods. It is important because, like I said earlier, if you're off by a block or 2 and you think it's the same thing, but in reality it is not, you will pay for it as an investor. Make sure you know what it is that you're looking at. The first search that I did was I did the closed apartment units. I'm looking at the 0 bedrooms, 1 bedrooms, 2 bedrooms, 3 bedrooms, and seeing how much they get in the 19140 zip code. That is not a great zip code in Philadelphia, but I wanted you to see what was available. For a 0 bedroom, meaning a studio, we got $625, and then up to a 4 bedrooms, we have $1,500. Let's see what's for sale in the same area, same search. This search is of the same zip code in the same area distance-wise. And what I'm showing is that you can buy a 3 bedroom up to a 5 bedroom. I'm sorry, this is a 2. There's 1 2 bedroom there. 2 bedroom, 3 bedroom, 4 bedroom, 5 bedroom. Prices start at $16,000, go all the way up to $184,900. Let's take a look at what you get for $184,000. If I click this, the picture should come up. And here we go. Here are the pictures of the property, and it's really nicely done. It's really nicely done. It looks like builder grade cabinets though. The kitchen wasn't spectacular, but it is a nice property overall. The railings are still wood, so it's not a full gut rehab. I would suspect that a lot of the plumbing and some of the electrical are probably still the same. It looks like they redid the half bathroom. They might have done drywall all over. They could have put drywall over the old plaster there. Not sure, but just from the looks of it, it looks like they did a really good cosmetic rehab. You can see that it still has a radiator there, so it's not a full gut rehab like I was mentioning earlier. The price has been dropped, so it doesn't look like many people are interested in it at $184,000. This is available on the market today. Now, since we are real estate investors, we are going to be looking for a much better deal than that. I looked at the highest price one. I am not going to be buying that one. I'm going to be looking towards more of the middle price ones, lower price ones. Let's look at this 3-bedroom here. This one's listed for $59,900. Again, this is available for you to purchase right now. And if I search through the pictures, let's take a look. Actually, let me enlarge it so we can look together. All right, tenant occupied, builder's grade cabinet, electric stove, which tells me that maybe this whole house is electric. That was an electric baseboard heater, I believe, right here. Electric baseboard heater. Okay, so the whole property is electric. That sometimes can be a bad thing, because if the tenants are spending too much money for heat, then they will maybe move out because they can't afford to be there. All right, we got a little damage to the drywall there. Not a big deal, but it kind of tells you what kind of tenant might be in there, because who breaks walls, really? And then you see there that the closet doors are broken. That drywall is broken there. This is laminate flooring. If you look closely, you can see the seams are buckling a little bit. This is why I don't like using laminate floors. I use the vinyl planks instead. They don't peel up. You can see it better here where the seams of the laminate floor are peeling up. The ceiling is showing signs that there was a leak, possibly. The door's off the hinges, so this property is going to need some work for sure. For sure. I see the window units there, the air conditioner units. All right, now let's talk about this property. This property is listed for $59,900. It has been dropped. The price has dropped, and let's see when how long has it been on the market? Days on market. Days on market, 51 days on market. Previous list price $65,000. They dropped it to $59,900. So they gave it a $5,000 haircut. If you were to throw, say, $20,000 worth of work into it, it might be a decent looking place. Now, mind you, this is tenant occupied already, so you will have to wait for that tenant to actually leave before you could increase the rent or do the work. Depending on whether the tenant is paying or not is a very important fact or detail that you have to figure out. And if they're not paying, will you be able to evict them? So it is kind of tricky when you are buying a property with a tenant already in it, but this is a potential. You buy it for 60, or if you negotiate, let's say we can get it for 55, put 20 into it, so you're at 55 plus 20. Now you're at 75 plus closing costs. Let's say you're all in at $80,000. Let's go back and let's see what the rents were for 3 bedrooms. Okay, as I mentioned, this is a sheet that is showing the leases that have occurred. These are settled leases. This is what people are actually paying. And for the 3 bedrooms, we have $1,375, $1,250. Your 2 bedrooms are going for $1,100. You got a 3 bedroom here for $1,000. Let's see what this $1,000 looks like. If I open this up. All right, so it's a builder's grade kitchen. It looks like it is laminate floor, but it does look like it has central heat because I see the vents in the ground. You see that vent on the wall there? All right, to get $1,000 for that property we just saw is not out of the ballpark. It's not unreasonable. So $1,000 to buy the property. Oh, I'm sorry, $1,000 to rent out the property. and you're all in for $80,000. So this passes the 1% rule. 1% rule is you take the purchase price or your all-in price and then you multiply by 1%. In our case, that $80,000 all-in price, an $800 rent would be sufficient for that 1% rule, to pass that 1% rule. Here, we're over $800. We're at $1,000. So this property will cash flow. But now, mind you, this is in the 19140 zip code of Philadelphia, which means that it is a bit rougher and you're going to require a higher ROI than your basic property because, again, the neighborhood doesn't justify a high rent. It's high risk. You're going to want a higher return. So let's go look at a different zip code that is a lower cap rate, a higher price point, but also higher rent. Here is a search of properties that were rented out in the East Falls section of Philadelphia, the 19129 area code, or I'm sorry, zip code, not area code, zip code. And you see the one bedrooms are 900, 1,000, 1,100, so much more than the other one. The 3-bedroom goes up to $2,300. That's significant for a 3-bedroom here. The 4-bedroom, it is $2,000. It's probably because the 3-bedroom that for $2,300 is decked out really nice. Let's take a look at what it is or what prices are for sale. Okay, so this is what is for sale. Not as many properties. This is actually countrywide that a lot of properties are not available. We have here 4 different properties to choose from. We have a 1-bedroom, 2-bedroom, 3-bedroom, and 5-bedroom. Let's take a look at that 3-bedroom, $339,000. Let's call it $340,000. Let's compare that again back to the 3-bedrooms that are for rent. Okay, these are the properties that were rented out. A 3-bedroom, the lowest 3-bedroom price is $1,550. If we compare that to the $340,000 sale price, that is looking like a 0.5% rule, not a 1% rule. Half. It's not looking good. Now you can go up. You can see the $2,000 price range, $1,975, $1,895, around there, and you're getting closer. You're like at a 66% rule, but still not a good investment, not good cash flow. Here's one more section of Philadelphia. This is the West Philly section. This is actually where a lot of the colleges are located, like University of Penn and Drexel, and even University of the Sciences, which is a little further out. But let's look at the properties that are for rent. I narrowed it down to just 3 bedrooms because if I didn't do that, there was 75 properties that were coming up. We have some that rent for as high as $2,000, as low as $1,200. I guess it depends on the finishing and how close it is to the university. Now let's take a look at what's for sale. Okay, now looking at what's for sale, just like what we had before, not too many choices. But we do have some properties that are in the 200 range, and we had the rents in the close to the 2,000 range. We are getting closer and closer to that 1% rule, and this is not as bad of an area as that 19140 zip code. If you apply this strategy that I'm doing, where you're looking at the rents as well as looking at this for sale and compare them, you may find yourself a gem. These are for sale, and they have been on the market. This one, the first one was on the market for 18 days. The second one was on the market for 111 days. Maybe they have room to wiggle. Maybe they'll lower the price significantly. There are ways to find deals. It looks like we might have a potential here, and sometimes it just requires some negotiations. Now, I did this little exercise with Philadelphia, but if you're not from Philadelphia, wherever you are, you can do the same exercise and you may find yourself a lot of properties. What do you do after you find all of those properties? Well, you got to go buy them. But before you do that, you have to look at them. And if you don't know what you're looking at, and if you don't know how to analyze your properties and you need some help with that, check out hoanzone.com and see what courses I have available. I have a lot of courses available that will show you how to analyze properties, how to negotiate, how to raise money, how to do everything you need from A to Z in order to buy more investment properties. One pro tip is to look at those days on market. If it's been on the market for a significant amount of time, then most likely they will want to negotiate, and you can find great deals by negotiating sellers down. A lot of investors and a lot of buyers simply look at the asking price and say, oh, that's not for me, it's too much money. But if you look at it and just notice that the days on market are high, you can say, oh, well, maybe I can make it a deal. It might not be a deal at the asking price, but I can make it one. What you think about that little exercise? Let me know in the comments below. I've never shown anybody that little trick, but it is a good one. Let me know if you've ever used something like that, and also let us know how you find properties. Maybe I can learn something from you. Thank you guys for watching that video. If you haven't already liked and subscribed, please like and subscribe. It helps with the YouTube algorithm so we can get this channel in front of more people who need the help. I just wanted to say thank you for watching this, and I will see you in the next video. Peace.